Ladies and gentlemen, good day and welcome to Q4 and FY24 earnings conference call of Agarwal Industrial Corporation. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Astha Jain from AIM Securities. Thank you, and over to you, ma'am.
Thank you, Sagar. A very good evening, ladies and gentlemen. Thank you for joining Agarwal Industrial Corporation Limited Q4 and FY24 earnings conference call. Joining us on the call today from the management team is Mr. Vipin Agarwal, Chief Financial Officer. We will commence the call with the opening thoughts from the management, post which we will open the forum for Q&A session, where the management will be glad to respond to any queries that you may have. Before we go on to the main call, I would like to read the standard disclaimer. There may be forward-looking statements about the company and the subsidiaries, which are based on the belief, opinion, and expectation of the company's management as of the date of this call. The company do not assume any obligation to update their forward-looking statements if those belief, opinion, expectation, or other circumstances should change. These statements are not guarantee of future performance and involve risks and uncertainties that are difficult to predict. Consequently, listeners should not place any undue reliance on such forward-looking statements. With this, I will hand over the call to Mr. Vipin Agarwal, Chief Financial Officer, to take it forward. Over to you, Vipin, sir.
Good afternoon to all, and a very warm welcome to everyone who has joined us today. It is my pleasure to welcome you all to the Q4 and annual FY24 earnings conference call of Agarwal Industrial Corporation Limited. Let me start by giving you a brief overview of the company's business. Agarwal Industrial Corporation functions as an infra-ancillary for the transport and logistics segment, leveraging its powerful logistical assets and infrastructure. It continues to be the largest bitumen player in the private sector in India. We are thrilled to report that AICL has delivered a robust set of numbers in FY24 compared to FY23. For the current fiscal year, we have achieved our highest ever revenue volume, EBITDA and PAT margins, showcasing our continuous growth and strong market position. In terms of volume, we have reported 15.80% year-on-year revenue increase in bitumen to 4.91 lakh metric tons, nearly meeting our expectations. Our compound annual growth rate for volume has been more than 15% since FY21. We are confident that this momentum will continue with projected growth of 15 to 20% in the coming years. Our volume target for FY25 is set at 6 lakh metric tons, aiming for a 20% year-on-year increase. With capacity constraints in India for bitumen and AICL being the only integrated player in the private sector for bitumen, we have been able to increase our market share. India saw 6% increase in bitumen consumption to nearly 9 million metric tons, which we grew by 15% in current year FY24. Currently, EBITDA per metric ton is around 3625 rupees, which we expect to increase to rupees 3800-900 per metric ton, reflecting our ongoing efforts to enhance profitability. If you see, we have grown the same from rupees 2278 in FY21 to rupees 2844 in FY22 and rupees 3409 in FY23, and now to rupees 3625 per metric ton in FY24. The rapid pace of infrastructure development is generating a significant demand for road construction materials, creating a robust market for our production services. We are delighted to announce that we have continued to achieve strong blended EBITDA margin of 8.3% and a PAT margin of 5.13%. These results are a testament to our relentless focus on strengthening cooperation and maintaining control over critical aspects of our business, particularly through ownership of our petroleum vessels, ensuring timely supply of demand generated back home. I am happy to share with 10 large logistics vessels, bitumen, and a total capacity of around 102,000 metric tons, we continue to be the largest private sector player in the country. Total bitumen transported through our own vessels is approximately 2.93 lakh metric tons, which has grown at a CAGR of around 27% since 2021. We are highly focused on efficient utilization of capital and strategic capex. Over the last 5 years, we have maintained an ROCE of 20% to 25% and an ROE of about 20%. We have strengthened our balance sheet, increasing our net worth from rupees 19,610 lakh to rupees 51,102 lakh and expect outperformance in long run. Although our debt to equity ratio has increased this year, capex for fleet ownership and securing tenders, it is expected to gradually decline as we achieve higher ROCE over the period. Bitumen consumption in India is one of the lowest among the 10 top countries by road network, creating significant future growth opportunities. India has the largest road network in the world at approximately 64 lakh kilometers, providing extensive maintenance opportunities year on year. The Indian government's ambitious infrastructure projects, including the Bharatmala project, are set to enhance road connectivity and drive demand for bitumen. The Road Ministry received a 36% increase in budget allocation amounting to rupees 2.7 lakh crore for 23-24. This boost is aimed at helping the ministry meet the 25,000 kilometer road development target. This accelerated pace of development is generating substantial demand for road materials, thereby increasing our responsibility in supplying bitumen. For the full year FY24, we achieved revenue from operations of rupees 2130.43 crores with an EBITDA of rupees 177.94 crores and a PAT of rupees 109.22 crores. This represents increase of 5.25%, 23.07% and 18.38% respectively compared to FY23. We are pleased to announce that the company has consistently paying dividend as recommended a dividend of rupees 3 per equity share for FY24. In Q4 FY24, our consolidated revenue from operations was rupees 778.20 crores with an EBITDA of rupees 61.90 crores and a PAT of 38.01 crores. These figures represent significant increases of 17.88%, 43.31% and 34.31% respectively compared to Q4 FY23, where we recorded revenue from operations of rupees 660.18 crores, an EBITDA of 43.20 crores and a PAT of rupees 28.30 crores. Our economies of scale achieved through our own fleet of bitumen logistics vessels and road transport vehicles enable us to outbid competitors, secure tenders and ensure high standards of supply and service to our customers. With expectations of strong growth in infrastructure activity and based on our current market trends, the order in pipeline, the company has a strong outlook for sustainable long-term growth. With this, we invite participants to ask any questions they may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Again, if you have any questions, please press star and 1 on your touchtone phone. Our first question is from the line of Tejas Khandelwal from Prudent Equity. Please go ahead.
Oh, hello. Am I audible?
Yes.
So, sir, first of all, congratulations for the good set of numbers. So, my first question is the third vessel still in dry dock?
No, all the vessels are in operations in the current quarter.
Okay, so how many rotations can it make in a year, 10th vessel?
Sorry?
How many rotations can it make in a year?
One vessel can make around 12 to 15 turnarounds in a year, depending upon which location it is allocated to. If it goes towards the east side, it may do only 8 to 9.
Okay.
The transit for the eastern region is double than the western side, and approximately between 12 to 15 turnarounds in a year.
Okay. And what contribution can we expect from our own vessel next year?
I am not considering the monsoon period in that.
Yeah.
Yeah.
So no, my question was, what contribution can we expect from our own vessels next year? So out of total volume, what can we expect?
This year we have done close to 60% through our own dedicated vessels. Coming in the next year, we may try to outreach this number and try to reach it up to 65 to 70%.
Okay, sir.
Because the turnaround of the vessel and the requirement of the product is in line. So one vessel will come after only 10, 15 or 20 days. After, in between, you always have to take vessels from a third party to keep your sales on.
Okay. And sir, regarding this EBITDA per ton of 3,800 to 3,900 you mentioned, so
yes.
Is that expected over next year?
Yes, it is for the next year.
Okay, fine. And sir, I have last question. So since the contribution of chartering business in Q2 is comparatively higher, and we have almost double our own vessel capacity, so what revenue growth do you expect in second quarter compared to last year's 232 crores?
See, all the vessels are in place now. All the vessels are operating. So we expect some increase of around 15 to 20% in terms of revenue.
How much, sir?
15 to 20%.
Okay, sir. And sir, one more last question. So, what was the realization of bitumen in last quarter?
It is around, as I mentioned, 625.
625. And where do you expect this going forward in like?
625.
Okay, and where do you expect this going forward in next in FY25 and 26?
Around 38 to 3900.
Okay. So that's all from my side. Thank you.
Thank you.
Thank you. Participants, if you wish to register for questions, you may press star and 1 on your touchtone phone. Our next question is from the line of Tanvi, who's an individual investor. Please go ahead.
Hello, sir. Congratulations for the set of numbers. I just had 2 or 3 questions. The first one is, sir, how is the problem we're seeing in the Red Sea? Because earlier in quarter 3, you said that the volumes were high, but realization was low. We're not getting the prices, and raw material prices also inflated. That's why the revenue was down. So is the Red Sea problem now resolved?
No, there are 2 different set of questions that you asked. Red Sea is not a problem for us because we are not going towards that side. We are coming from the Gulf countries to India, where we do not fall in between of Red Sea. That will be answering your first question. And in terms of realization, yes, the total realization for the entire year has been comparatively low. Since it is a commodity product, the realization is lower than the last year. Last year, the total realization was around 42,000, which this year it is around 36,800. We have lost nearly about 300 to 400 crores of turnover on the turnover due to the price fluctuations, and we have still maintained our top line compared to last year.
Okay. And sir, any guidance in terms of the commodity prices that we see for this year?
It should be more than the current realization that we have on average this year.
Okay, got it. So one more question. So this quarter you've done phenomenal in terms of volume and revenue, but you've also said that there was one order from IOCL for 192,000 metric ton, which was expected to start in quarter 4 and to be completed in this particular quarter. So is this volume high?
It was from HPCL, BPCL together, which we are already supplying. And we have already supplied close to, okay. We have already supplied close to 60,000 tons to all the 3 PSUs.
So is the 60,000 tons a part of that 1,92,000 order that was secured?
Not entire. 25,000 tons is not part of this because this volume order we have received in the current quarter.
Okay. And by what time can we expect this order to get completed?
It's on a continuous basis, as and when it's on a regular basis the supplies are happening. So this entire volume is till FY25.
Okay, so in this year only you'll complete this entire order.
We are ready to complete. The PSU should uplift that much of product as per the order given by them.
Okay, got it, sir.
Thank you.
And sir, I'll join again in questions.
Yeah.
Thank you. A reminder to all the participants, if you wish to ask questions, you may press star and 1. The next question is from the line of Vomik Shah, who's an individual investor. Please go ahead.
Hello.
Hello. Hi.
Hi. Good evening.
Good evening.
Yeah. So any plans for capex for this year? That's my first question.
Yes. As we have always said in all the con calls, it all depends upon the opportunities that the company gets. And if there's a good opportunity wherein the capex is at a reasonable price, when we are able to maintain our return capital employed, then the company will definitely go for it. It all depends on the opportunities that the company is having.
Okay, so we may look out for the opportunity for the capex as well, right? So that is on the card.
For good opportunities. And if you see last 3-4 years, we have always been adding, doing a capex of around 150 crores in a year.
Okay.
Going forward, I think in that context, we may continue the capex in the same line.
Okay. And going forward in the next down the line 2 to 3 years, do we see a possibility that we may touch this 1 million metric ton above this bitumen supply? Do we see we can cater that much of demand?
We can easily cater that much of demand, but provided we have that much of logistics available at our end to bring the product to supply that much of volume. The volume is definitely achievable and can be easily done. It all depends upon logistics that you have with you. That is the reason the company is focusing on having the vessels to transport this much of quantity into India for the sales that we can cater to the market.
But I think we have significantly increased our capacity, right? Because earlier, up till last quarter, we had 47,000 metric ton capacity. Now it is over 1 lakh metric ton. So I think we have increased significantly our capacity.
Yeah, significantly, but we are into the vessel turnaround is, as I mentioned, around 15 to 20 days in the west and around more than a month for the east. If you have one vessel which is already delivered, it will come back after 15-20 days. And in the meantime, if you are increasing your throughput and sales, you will definitely require 2-3 vessels in that period. So ultimately, your dependency on third party will stay till the time we have in-house capacity of around or more than 2 lakh tons.
Correct. Okay. Thank you so much.
Thank you so much.
Thank you. The next question is from the line of Raj, who's an individual investor. Please go ahead.
Congratulations on the good set of numbers.
Thank you.
What is the revenue growth projection for the current year, FY25?
Yeah. We are always targeting around 15 to 20% in terms of volume. We expect this in the line, if we are increasing to 600,000 tons, so it should be around 15 to 20% on the turnover side, provided the rates are stable. If the commodity prices goes down, then maybe the effect will be in between the current financial year or to the next financial year.
Okay. for last 5 odd years, we have been growing at a much faster pace. So are there any plans of increasing the lines of business or any other expansion plans which could, where we can expect a much higher growth rates?
See, there's a very good potential still left in this current market that we are. We can easily do more volumes, as I mentioned earlier also. There is no constraint in supply, in doing your sales. We are focusing on our infrastructure and logistics, where we can bring in more products for the disposal to sell in the market. I hope I have addressed.
Yes. But we have largely been the last couple of years, we have been incrementally growing at about 5% for the current year. It was in terms of volumes, in terms of sales growth. So I was just wondering, do we have any?
More than 15%, 15.80. So this is the volume-wise. We have always maintained more than 15% in the last 5 years now.
Right. Okay. Thank you so much.
Thank you. A reminder to all the participants, if you wish to ask questions, you may press star and 1 on your touchtone phone. Our next question is from the line of Yash Kukreja from Equitree Capital. Please go ahead.
Hi, thank you so much for the opportunity. So congratulations on good set of numbers. So my first question is, sir, is this the peak debt? As you said, rightly said that we are going to expand more, like we are going to buy vessels if the opportunity arises. So is this the peak debt, or are we going to do some expansion with debt also from here onwards?
We have always been doing expansion, mix of equity from the company and debt. It has to be a mix of debt and equity both. That the current cash flows do not get impacted with the growing business.
Okay, got it. And so my second question is, sir, considering the political scenario that is as of now, sir, do we see any impact, like if there is a slowdown in construction of roads and anything like that? Do we see any? How do we cover ourselves for that?
So absolutely not. The current political side also focuses on infrastructure, and the infrastructure growth or the projection is not over a year. It is always future growth, wherein they are whatever tenders or contracts have been awarded, it is kept in the focus of next 3 to 5 years. So whatever tenders have already been allotted or are in the pipeline, it will be for next 3 to 5 years. So absolutely no problem in terms of volume growth or even in infrastructure side, even if there is some other government.
Got it. Okay. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Pritesh from Lucky Investment. Please go ahead.
Yeah, hello, sir. My question is, on your slide, there is the slide where you have mentioned the volume handled by your own ships and the ship tonnage.
Yes.
So currently, are you using those ships completely for supporting tonnage, or these ships take you to a higher tonnage number, and what will be that tonnage number be? Because your ships will come the year, right? Throughout the year.
Yeah. The quantity mentioned there is only 9 vessels which we have. We had till January, and the 10 vessels still we have as to add its volume in the slide. So going in the next year, maybe we will be able to do about 3.5 to 4 lakh tons through our own 10 vessels.
Okay. So the 2.9 lakh tons that we see today in the presentation.
Yeah.
So your 10 ships can support
33% increase there should be in the coming year. Okay. Between 25 to 33 or 35%. Okay. In terms of volume through our own vessels.
Own vessels. So to that extent, it's to do with the time of the year when the ships came, right?
I think there's some crack in your voice. Repeat the question, please, sir.
I said it's to do with the the time when the fleet was added, right? It's to do with that. You would have got the fleet partially available for the year. It's to do with that?
Only 1.5 months in the current financial year.
How much of your capacity was available for only 1.5 months?
This year, the large vessel capacity has not been utilized at all because it was just purchased and there was some work going on.
And what is the size of that capacity?
It's around loadable around 44,000 tons.
Okay, so out of a million ton, right?
No, the vessel capacity I'm saying is around loadable around 42 to 44,000 tons.
So on the same slide, there is a vessel capacity number, which is the total tonnage you can handle. Is that the number, about a million or something?
No, it's 1 lakh, around 1,02,000 metric tons.
So out of that 1,02,040, which is your last vessel was available for 1.5 months.
Yes.
Okay.
Yes.
I understood that. Then from your presentation, there was one slide on imports into the country and total consumption, right?
Yes.
Is there, though the market share reduction is very small between the last 2-3 years, but there is some market share reduction in the import. So your volume as a percentage of the import, right?
Yes.
Okay, why is it so? And then you are saying that I will be 20-30% of the imported volumes eventually of the country. So how will you achieve that trajectory?
There has not been a decline in the imports. Even in my slide, it has increased from 2.8 million to 3.5 million. So there has not been a decrease in the volume of imports.
No. I know, it's just your market share, little bit has changed in the last 2-3 years. That's it.
Yeah, see, we have been focusing on more volumes and we have actually gathered some of the market share of maybe some other players in the market.
Okay.
We have tried to take away some other player in the market who is share of the other player.
Okay.
And going forward, see, as if you can see, the volume from approximately 2.9 million to 3.5 million it has gone. So it is about 600,000 metric tons increase from 23 to 24. Even if we consider the additional volume, and we have been a major player who has contributed in the additional volume.
Okay. And I have one last question.
Yes.
You added ships and your balance sheet has a certain debt on your balance sheet now.
Yes.
How should we look this debt number? How should we look the ship addition number over the next couple of years?
You mean it's the return on capital?
No. How should your debt look like over the next 2 years, and what is your incremental ship addition program for the next 2 years?
Okay, sir. So see, the debt has gone up, as I mentioned. This is added only in the month of Jan-Feb. So the total, or if you consider on year-on-year basis, the debt equity ratio would be maintained in comparative to last year, because this capex was around 16 to 17 million. So it is a very high capex that we have done this year. And in the whole year, if you consider this, it would be a return of around between 20 to 25%, which we have always been maintaining in the last few years.
Okay.
Going forward, as I mentioned earlier also, if there is a good opportunity where we feel that the ROC and ROE of the company is maintained at the current level, in fact, on a blended level, if it gives us higher returns, then only the company will decide to go for it or not to go for it. As our return on capital employed and on equity is significantly very good in the last 4-5 years.
Okay.
So going forward, if there is a good opportunity where the company feels that both these ratios would in fact give us higher returns or at least maintain this percentage, then definitely the company will decide accordingly.
So what is the ship addition program for the next 2 years? Will you add more ships?
As the requirement of the product, we feel yes, there are chances of few more vessels that the company can easily add to cater to the local demands in India.
Okay. Done. Thank you very much and all the best.
Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Nikunj Mehta from Wealth Guardian. Please go ahead.
Good evening, sir. Thank you for the opportunity. My question is a little broad in nature. Firstly, I want to understand what's your near-term vision for the company. Where do you want to take the business, and what are the key challenges to achieve that vision?
Thank you so much. The broader vision that the company is having is the company wants to be the highest bitumen player in the industry in terms of manufacturing, import, logistics, all the factors together, because we are a support system wherein we are supplying product to the infrastructure development of the country. We are one of the key infrastructure player wherein we supply bitumen for the development of the road. So in the coming few years, we have a vision of doubling the volume that we are doing in the next maybe 2-3 years from now.
Okay. And what are the key challenges that you think you will face, which you need to take care of?
Challenges, we don't see a great challenge because the company is well positioned in terms of locations and the logistics advantage that we have. I don't think any other player in the entire Indian state is having the setup that we have already built in the last few years. We just have to turn around the throughput from the storage tanks or the storage manufacturing capacities that the company is having. So we don't see a very good or much challenge from the market.
Okay. Okay. So second question is, are we looking at any other areas or opportunities apart from bitumen, or we stick to this core and then we try and expand to adjacencies? What would you?
Yeah, we have always been focusing on forward and backward integration of this in the same field that we are. The logistics side, if you say land and sea, the logistic advantage in terms of manufacturing plants and import locations and procuring product from the source origin. So we have always been following a forward and backward integration in the same line that we are in. So company will focus on the key areas in the same segment or the forward or the backward integration. Maybe company can produce bitumen on its own in the coming future. Sorry?
Mr. Mehta, we are not able to hear you.
Can you hear me now?
Yeah.
I missed the last line, sir. Did you say?
We have always been focusing on forward and backward integration. So in coming future, maybe the company may produce bitumen on its own as well.
Understood. Okay. And so last question is, if you were to have an opportunity to add larger sized fleet or other opportunities, conceptually, are you okay to have a little higher debt, or would you be comfortable diluting and raising equity? What's your thought process? What kind of leverage are you comfortable in? What kind of CapEx would you do in a year? Do you have any kind of philosophy or thumb rules?
If you have to, on a company level, I don't think so. Equity is, debt is always cheaper than equity. If there is any plan for the company to add more vessels in terms of capex, the company will not dilute. As of date, I feel, this is personal opinion, debt would be a cheaper option than parting with the equity.
All right, so thank you so much for the opportunity. There's much more I want to learn about the company, so I'll reach out to you independently for that.
Sure. Thank you so much.
Thank you. Have a good day.
Thank you. Our next follow-up question is from the line of Tanvi, who is an individual investor. Please go ahead.
Hello, sir. So just one question. So if we assume that we don't lend our vessels, all the vessels, for any chartering to third parties, then what is the maximum, volume that we can do from our own vessels? Our total fleet is now more than 1 lakh.
Yes. See, we have to understand that in the monsoon period, that 4 months that we have to take that into consideration on the entire yearly basis as well. So 4 months, there is hardly any demand in India. So during that time, you have to lend your vessel to third parties, or your revenues during that time. So on a year-on-year basis, these 4 months of monsoon, you have to lend your vessels to third parties.
Right. So I'm just asking on a broader level, what is the maximum capacity that we can cater to? Even if we, at times you say that when we get a better rate from a third party, we would would hire a third party for our logistic and we would give our vessels to somebody else. So I'm just talking
already been doing on a continuous basis as and when the challenges or the requirement is there.
No, my question is, what is the maximum capacity that we can do from our own vessels? Considering the monsoon and considering all the challenges on a normal scenario, in a year, what is the maximum?
I believe we can easily go up to 65 to 70% in the coming year with the volume that we have in mind.
Okay. Okay. And so any guidance for the upcoming quarter, because we expect generally second quarter we don't see on a QOQ basis. So any expectations for the first quarter? Any order that would be completing in this quarter one?
You mean to say capex?
No, so not capex in terms of volume or revenue for the next half year, because this includes the monsoon period as well.
No, this first quarter will not be including monsoon. It is only hardly 10 days maybe of June. So we expect to be in line with the last few years that we have been.
Okay. Thank you, sir.
In fact, we would be doing higher volumes than the last few years in the first quarter.
Okay.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to Ms. Aastha Jain for closing comments.
Thank you, Sagar. On behalf of Clean Securities Limited, I thank Agarwal Industrial Corporation Limited team for giving the time we spent on this call and responding all the queries in the detailed way. I would also like to thank all the participants for joining this call. Now, I would like to hand over the call to moderator for closing remarks.
Thank you. On behalf of Agarwal Industrial Corporation, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.